In May 2010, a programmer named Laszlo Hanyecz posted a simple offer on a Bitcoin forum. He would pay 10,000 Bitcoins for two pizzas. A user known as Jerkos, later identified as Jeremy Sturdivant, accepted the offer, called a Papa John's, paid with a card, and had two large pizzas delivered to Laszlo's Florida home. Laszlo sent 10,000 BTC to Jerkos, and the trade was completed. That exchange is widely recognized as the first publicly documented purchase of a physical good using Bitcoin. To understand why those two pizzas became a legend, you have to go back to why Bitcoin existed at all. In October 2008, an author using the pseudonym Satoshi Nakamoto published a 9-page paper titled Bitcoin, a Peer-to-Peer Electronic Cash System. It proposed a way to solve the double spending problem without a central authority, a distributed ledger secured by cryptography and proof of work. In January 2009, the very first block of the Bitcoin blockchain was mined, the Genesis block, and the network was born. This was not a money launched by a bank or a government. It was a protocol built by code. In those first months and years, Bitcoin was tiny. There were no exchanges with deep liquidity, no mainstream merchant support, and no market price like we understand it today. People mined on home computers and traded on forums. To many early users, Bitcoin was an experiment, a technical curiosity and a statement about money and trust. Laszlo's pizza post wasn't a bid to become rich, it was a practical test. Could this thing be used to buy ordinary stuff? When the transaction happened on May 22, 2010, those 10,000 BTC were worth roughly $40. Estimates from contemporaneous posts put the value in the low tens of dollars. The precise dollar figure matters less than the context. At the time, Bitcoin had almost no general market value and was largely unknown outside niche technical communities. The exchange proved something simple but crucial. A person could hand off Bitcoin and receive real-world goods in return. That moment is now celebrated every year as Bitcoin Pizza Day. What makes the story almost unbearably ironic is what came next. Bitcoin survived early technical skepticism, exchange hacks, regulatory questions, and waves of mania. Over the following decade and a half, demand for Bitcoin grew. Institutional interest crept in, and prices rose in fits and starts until the asset was being discussed alongside gold and other store of value assets. By the mid 2020s, those same 10,000 coins were worth in the neighborhood of $1 billion. Depending on the day, turning two pizzas into the single most famous retail purchase in financial history. That eye-watering modern valuation is often cited in retrospectives of the pizza. But if you strip away the meme and the headline numbers, the pizza story reveals deeper truths about innovation, value, and human judgment. First, value is social and time dependent. In 2010, the idea that a block of cryptographic proof could carry value for everyone was still hypothetical. A handful of enthusiasts placing genuine bets with early coins helped bootstrap the social consensus that a Bitcoin is worth something. Someone had to be the first to use it in commerce. Laszlo's pizza was that demonstrative act. Second, the story is a reminder of the sheer randomness and fragility of early adoption. Around the same time, and in the years that followed, people lost coins forever through simple mistakes, forgotten passwords, discarded hard drives, misplaced wallets. The famous case of James Howells, who accidentally threw away a hard drive containing the private keys to thousands of Bitcoins and later tried for years to get permission to excavate a landfill in Newport, Wales, is a darker counterpoint to the pizza tale. That lost drive may hold enormous value today, but it's probably unrecoverable, and the episode illustrates how human error can erase fortunes in a system that otherwise enforces scarcity perfectly. Third, the pizza incident crystallizes Bitcoin's novel combination of technical design and social adoption. Technically, Bitcoin enforces a maximum supply of 21 million coins. It has engineered scarcity. Socially, value requires belief. The idea that people will accept coins for things and institutions will back infrastructure that supports them. The pizza was a small but pivotal ceremony of acceptance. Code became currency in a concrete transaction. It's worth addressing the human side directly. People ask whether Laszlo regrets it. He has publicly said he does not. At the time, the coins were cheap, liquidity was thin, and many early users spent BTC simply to see whether it worked as money. Laszlo's intent was to seed real-world use, not to time a future market. His action helped demonstrate utility, which arguably contributed in a tiny way to Bitcoin's eventual growth. Seen from that angle, The pizzas were not an accidental loss, but a deliberate experiment that helped move Bitcoin from theory into practice. There are also lessons for anyone watching markets. First, early adoption often looks ridiculous until it doesn't. What seems like an absurd trade today can be the origin story of a new asset class tomorrow. Second, volatility and technological risk remain central features of crypto. Exchanges have been hacked, custodial practices have failed, and regulatory regimes are still evolving. Third, narratives matter in scarcity, decentralization, and distrust of central banks have been potent stories that drive demand as much as underlying utility. Those are not purely financial signals, they are cultural forces. Finally, the pizza story is a human parable about risk, experiment, and storytelling. Two pies, exchanged on a small web form, became an emblem for an entire movement. Bitcoin's journey since then has been messy, inspirational, and sometimes cruel. Fortunes exploded upward, others vanished, and the technical experiment that Satoshi described in 2008 has produced social and financial consequences nobody could fully predict. Whether Bitcoin becomes a permanent pillar of global finance or a historic technological detour, the pizza will remain a tidy, almost tragic fable, a moment when someone decided to buy dinner with an idea.